Hi, welcome, Self-Made Nation, to the Cash Rich Exit podcast. I'm Colleen O'Connell-Campbell, Wealth Advisor at RBC Dominion Securities, and your host. Today's guest, Peter Walker, a fellow certified exit planning advisor. Peter brings a unique perspective shaped by his PEI roots, public service background, and leadership career in banking. Today, we're exploring that very important topic about business transition, obviously. But in our conversation today, we're going to dig into why so many Canadian businesses lack the support they need for succession planning. What is at stake for communities when local businesses are sold without a plan, and how employee ownership through an EOT, an employee ownership trust, or otherwise, may offer a path to preserve legacy, create liquidity, and protect local jobs. As you listen, if you're thinking about your own exit readiness, I invite you, actually, I encourage you to reach out to me. Let's uncover your wealth gap. Now, without further ado, let's meet Peter Walker. Welcome, Pete Walker, to the Cash Rich Exit podcast.
Thanks, Colleen. Great to be here.
Yeah, well, let's jump right in. Let's start with your story. Tell us about your family roots in PEI and how that is informing what we're going to talk about today.
Thanks for that opportunity. It's great to be here. Really looking forward to this conversation and not only sharing my story, but helping others who are listening to just start to go down the path of building their story as well. My story starts in a community called St. George's, Prince Edward Island. My hometown has 90 people in it. And so by Prince Edward Island standards, I grew up in the country, which I know is a statement. I grew up on a potato and cattle farm that had been in our family since the 1790s, give or take. So I would have been the eighth or ninth generation of my family to work the land. And, just knowing the sense of community and values, looking out for your neighbor, really trying to be a positive contributor to the place around you. Those were things that were fundamental to how I was born and raised. This is really the third act of my career. I worked on Parliament Hill at my first act. I worked at one of the big five banks for my second. And now there's really two halves to my brain in this third act of my career. On the one hand, it's, how do you help normalize the conversation for business owners who are having trouble, going down the path of determining what they want their transition to look like. And then on the other hand, trying to advocate and grow the employee ownership industry here in Canada. All of those things are very much rooted in, as I mentioned, how I grew up, but also the first business transition conversation I ever had. I was 14 years old. My dad, had to figure out what he was going to do with the farm. And so when I was 14, he sat my little brother and I down at the kitchen table, and we had a one sentence conversation. He said, "I don't know what the two of you are doing with your lives, but you're not doing this." That was the chat. So dad made the determination that, at some point our family farm wouldn't be big enough to succeed. He made the call that he did not want to lose the land. And so he operated for another 10 years after that. And when he wound down, there was really, 15 of our neighbors lost their seasonal employment. A bunch of local businesses lost customer. The tax base shrank by a tiny little bit. And that's just a series of really crummy outcomes. And when you think about the risk that we face as a country over the next 10 to 15 years of this generational transition of business ownership, it's just a big part of why I want to do the work that I'm doing, because, just trying to help people avoid that fate, if that's the fate they want to avoid. On the ownership side of things, this is where my passionate Prince Edward Island nature comes to the fore. If you go through a little bit of a history lesson of Prince Edward Island, one of the things about PEI is, as many people would know, Canada was started on Prince Edward Island through the Confederation meetings in 1864. However, Prince Edward Island did not join Canada when Canada was formed in 1867. We held out for 6 years.
Interestingly enough, right?
Interestingly enough, we're a stubborn bunch. We had three conditions. And one of those conditions was we needed a solution to an ownership problem about Prince Edward Island. When the island was being settled by the British, they, I'll say, granted some rights and title to absentee landlords, we call them, who were English lords, who promised to develop the island
Hmm.
after having gotten said titles. You can imagine in the 1800s what did not happen after those were granted. And so one of the conditions that Prince Edward Islanders had before agreeing to join Canada was we wanted the government of Canada to buy out the English people overseas who had not set foot on the island and just weren't going to try to contribute to the growth of the economy there. So we struck a hard bargain. We got what we wanted, and 6 years later, that's when Prince Edward Island joined. And so when you think about just like the moment that we're in here in Canada,
Hmm.
there's a very long streak of pride in our community, especially in Atlantic Canada, especially in Prince Edward Island. And so when we think about this whole big question of like, who is it that actually owns our economy? Who is it that's going to actually contribute to the communities in which we live and operate? That's just a really deep rooted, multi generational part of the story, which, again, not only the personal experience I've had with the farm growing up, but also just the experience that we've had back in the day. It's one that a lot of us just don't want to repeat as we move forward.
Right. And it's through a bunch of micro conversations like this that we've had since we met about a year ago. So we're recording this in May of 2026. And it was around May of 2025 that I believe we met at a conference symposium talking about business transitions. And then from there, we've had a few conversations, especially around the employee ownership space. Um, Employee ownership space being one that has not been well recognized as a viable exit option. Not that it doesn't exist at all, just that it hasn't been, something on a broad radar, and something that you are very actively involved in supporting, and I've been getting behind here as well. But before we dive further into that as an option, um, I'm sure it's like that saying, sort of preaching to the choir. If you're listening to this, then hopefully that means if you're a business owner listening to this, hopefully it means you are thinking about your intentional exit, because every one of you, self-made nation, you're going to exit in some way, shape, or form. Um, but as you've been going across the speaking space, Pete, and sharing your story, the big issue is that it's not being thought about enough, and that there's do I do I act dramatic and say like a crisis of support for Canadian business owners, especially in rural parts of Canada? So what kind of conversations are you having? What are you seeing?
Yeah, and there's really two stump speeches that I give. So, as I mentioned, I worked on Parliament Hill for the first act of my career. So, when I'm out speaking, I think about the stump speeches that I give. One is really on that emotional side of how do you normalize the conversation for business owners and their advisors and whomever it is that they trust in the first place, because that's a hard one. And the other one is, trying to expand awareness on some of these employee ownership options. I've recently joined the board of Employee Ownership Canada, which is the industry nonprofit really advocating for growth in the industry.
Mhm.
When I think about the things that I see, especially when I'm in Toronto, I live in Toronto, a good chunk of the speaking that I do is outside of, the downtown Bay Street towers. There are really two problems that I see. One is, a bit of a rant. We Atlantic Canadians like to rant every once in a while. The first rant is, especially in these non-urban parts of Canada, access to capital is a really, really big problem. You probably would see a lot of studies being done in parliaments, both Senate and through the Competition Bureau. Like there's a lot of people talking about how do we get more capital into the hands of small business owners
Mhm.
across the country. In the 2 decades of my career that I experienced before getting into this third act, there were two things that I always saw. Remember, one was economic development role in the federal government, and the other was at one of the large banking institutions here in
Mhm.
Canada. And so these two things that I always saw: number one, capital does not flow east of Montreal in this country, and I have yet to meet a fellow Atlantic Canadian who has disagreed with me on that.
Okay.
The second part is I found that capital even more rarely flows to the non parts of Canada, and so it's just really hard as I'm sure a lot of your listeners outside of the really big cities of Canada might feel, it can just be really hard to access the money you need to do whatever you're trying to accomplish. And so that's one big problem. But the other big problem is what you alluded to as you were asking the question, which is whether you call it a crisis or avoidance or whatever you want to call it, it's just really, really hard for a lot of business owners to proactively and publicly with somebody else engage in that conversation of when I move on, because it's inevitable and it's going to happen, what do I actually want to be the outcome? I find there are a lot of really psychologically, emotional, identity driven factors that
Mm-hmm.
lead to that avoidance. I've in different corporate contexts in my own career, I've experienced them myself. So to a certain extent, I can understand some of the underlying feelings that drive it. But when you boil it down, it's like if I'm a successful business owner and I've been doing this for decades, and I really strongly identify with being an owner and the impact that we have in the community and all the kids sports teams that are sponsored and all of the great things. If I love doing that so much, why would I want to do my professional will and plan for a day that I can't do that anymore?
Yeah.
Right? Like that's a very natural and human reaction. So you kind of push it off until it's too late, and then you get into the crisis situation that you referred to earlier.
Yeah. So you don't want to be in a situation where it's, death, divorce, disability, and then
Yeah.
there's a, need to liquidate or bankrupt or whatever, right?
Yeah.
Actually, in conversation with clients and some of our other support mechanisms and team members with RBC, which is where I practice my wealth management business, and the business owner, that's what we're talking to him and spouse who's also a shareholder in the business and actively involved, but in particular the one driving the sales and the growth of the business. He's saying, I'm just going to keep working kind of forever. I'm going to maybe do another project actually and scale back a little bit from this operating business, but I'm going to start this other operating business. It was as though there's no real
What does their
exit.
partner have to say about that?
Yeah, yeah. Well, that was interesting because we, we joked about it a little bit in the meeting, but I think it gave them a lot to think about, and certainly the identity piece is an interwoven underlying conversation in a lot of the podcasts that I have where I'm interviewing exited owners, because whether it's not really thought about and then the day comes and then there's the realization of, well, what is my purpose now?
Yeah.
Or whether it's just, as you said, the avoidance of it in the first place, because I don't want to think about what I am if I'm not the owner of the business. Yeah.
And
Yeah.
and what I've also found in a lot of conversations, which I mentioned I was in a corporate environment for 14 years.
Hmm.
What has really struck me about moving into this industry that I'm in now for this third act is how similar the underlying conversation is that you need to have, because both in a corporate context and in a business owner context, I find a lot of people just haven't been taught how to think about that for themselves. Um, I'm sure you run into a lot of business owners, as do I, where tremendous business people can do a long-term strategic roadmap for how they want to grow the business in their sleep, but can't come up with a strategic roadmap for themselves, right? And understanding, as I think off into the future, what do I actually want my outcome to be? As I think about the last day that I ever had before I hang it up, as I look back, what is going to make me feel as though I had a really like meaningful, fulfilling run, and that I can look back with a lot of pride on how things ended up. That can just be a really hard thing for people to think about when you turn that inward, even though the people in that ownership share may be exceptional at it when thinking about how to apply that to their business.
Yeah. Well, and that's where I don't have the psychology degree, right? But we can bring everything we can to the table to help support around it. Okay, so what we're really here to talk about is this option around employee ownership, and in particular, the employee ownership trust structure that we now have in Canada, and like super great news. again, I'm going to let you share that. So we had a sunset clause on this $10 million capital gain associated with the employee ownership trust in Canada. And you've been heavily involved in the efforts to uh, bring some permanency to it. And dum bum
Yes,
bum.
indeed. Da, 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 da.
Drum roll.
Yes, we got the permanent extension that we were hoping for in the industry. And so, if you think about the lack of confidence that a lot of business owners and their advisors would have in not knowing whether this option would be available to them after calendar 2026, the federal government in last week's spring economic update announced that as part of the broader Canada Strong economic sovereignty agenda that it has, the capital gains exemption is being made permanent. And so we're obviously very thrilled at that news, not only for, again, the confidence with which business owners and their advisors can now plan to see if this is a great option for the outcome that the business owner is looking to drive. But we're just completely thrilled for, if you think about the big picture of, how many people and how many communities this can benefit across the country. Because really, when you get into a lot of the benefits of what an employee ownership model can look like in your company, this is based on 5 decades of experience in the US and over a decade of experience in the United Kingdom. It's really simple. Once you have a really strong leadership team in place, makes it more likely that you have a strong culture at your company. And when you supplement that not only with an actual ownership stake for the people that work there, but you actually teach them how it is they can take advantage of it by applying more of an ownership mindset in the day-to-day work that they do, there are a tremendous amount of things happen both financially and socially. From a financial standpoint, and again, this is the research that bears this out. 8 to 12% increase in productivity at the company. Obviously, the company's going to be more profitable. That's going to put more money in the pockets of the owners, who are now the people that just work hard and work hard by being there. For the bankers in the crowd that are listening, loans get paid back faster. The companies are more resilient. Fewer of them close in economic downturns. For the wealth managers like yourself who are listening, people who work there retire with twice the retirement wealth as people who work at non-employee owned comparable companies. Like, there are just so many fantastic things that happen, and it all kind of boils down to that root mission that I'm on, which is just how do we keep more Canadian businesses locally owned, operated, and thriving in their communities through this generational transition of ownership.
Right.
Employee ownership is a very obvious way that you can do that. It's not the only way that you can do that. And so, for folks like you and I who work with business owners and helping them understand what those options for themselves are, I think we would all agree that the more options at the disposal of Canadian business owners, the more likely they will be able to find something that works well for them and their families and their communities.
Exactly. But it's been just so under the radar that it it requires this additional attention to it, right? So
Yes.
familiar with the idea of a family succession, yes. Familiar with the idea of selling to whether it's a strategic or a financial, like a third party coming in and buying the business, whether that's, an individual and, coming in, technically taking over, or if it's, another business taking over, or if it's a PE, a private equity. And there's pluses and minuses, certainly, private equity can have a negative connotation to it, but it's not all bad. It's like in my
No, it's
business,
not.
it's like people are like mutual funds, all bad, too high. No, it's not. It's not all created the same. Employee ownership, there's the employee ownership trust. There are other ways to have a true employee ownership structures, but it needs to be considered a viable option. And before our episode is going to air for the Self-Made Nation to listen to, I would, or if you're listening to this, actually, keep in mind, if you haven't been following, there are a number of other episodes where I have interviewed business owners who have exited or have set their businesses up this way. So we had Peter Dietz last year talk about the Grant Book exit, which is Canada's first employee ownership trust under the new structure. and not hasn't gone live yet, but will have by the time we're listening. You're listening here to Pete and I. But I have Aaron from Bright Spot Climate. What's his last name? Come on,
Aaron
Peter.
Schroeder, employee
Schroeder, that's
ownership number
it.
two.
Yeah, there we go.
Another good small town farm boy like myself.
There you go. Great story. Go back and listen to that. I've also chatted with Chad Friesen. There's a long time employee-owned company, Friesen's, and that'll be airing before we chat, Peter. And actually, Chad made a prediction about where the EOT situation would be. I don't know. We didn't make any bets on it, but it was a positive, and so coming to fruition. And already out there, the Taproot EOT.
Yeah.
So some pretty significant stories with varying degrees of length of time they've been in place, but very positive experiences and some warnings or tales of some things
For
you might
sure.
want to do differently, as there are with any kind of transition structure.
And that's just it, right? I think what's really important in terms of how you position those comments is, yes, there's a wide spectrum of how employee ownership can be implemented in your company. Um, on one end, there are full-fledged worker co-ops, right? Like fully democratic, one member, one vote. You can do a management buyout. That's a very commonly known version of employee ownership.
Mhm.
There's the employee ownership trust, which is actually designed to be a transition vehicle. So, like at the point of sale for the business owner,
Mhm.
the structure is designed to help facilitate the sale in a manner that it is all of the employees that are the beneficiaries of ownership in the future. I'm sure a lot of your listeners are familiar with what's known as an employee share ownership plan. For anyone who's familiar with Ellis Don, who's listening, right? Like Ellis Don is one of the largest construction companies in Canada. 100% of Ellis Don is owned by the people that work there, right? Like that's a phenomenal success story.
Mhm.
And so just depending on as a business owner, not only do you have to contend with when I think about moving on with the options that I have, whether it be private equity, strategic, third party, entrepreneurship to acquisition, keep it in family, employees, whatever, like there's a lot to sift through there. But even once you get to the employee option, there's multiple versions under that as well.
Mhm.
And so it's really back to what you were saying and how you position things. It's really important that a business owner can understand what is it that I am actually trying to accomplish here, but also giving an honest assessment of what do I think is going to be the best strategic and behavioral driver of success of this company in the long run after I'm gone. Because after you start sorting through not only those personal, but also those tangible business considerations, you may arrive at the conclusion that says, I should sell to a third party, or I should sell to private equity, or you name it, right? As a business owner, you've earned that right. You know what I mean? Like if we're really going to keep the supply chain of Canada and the economy of Canada and our communities of all shapes and sizes from coast to coast to coast really humming 10 to 15 years down the line, we do have to make sure that we match make the right businesses and the right business owners with the right
Exactly.
transition opportunity. It's not for me to decide what your business does. Like you as the business owner have earned the right to decide for yourself. Now, I feel very passionate about making sure that those business owners can be confident and with clarity understand for themselves and then go execute on whatever their chosen path is. It just so happens that as a advocate for employee ownership options in Canada, I do strongly believe that as more business owners understand what the benefits are and who this type of option is a good fit for, I do actually think that it's going to resonate with business owners who understand that blend of, yes, I can have a great financial exit. And if I care about some of the legacy components of how this
Mhm.
all plays out in my story, I can get that as well.
Exactly. If you don't know about it, then you can't even consider it. And it's like so many things, it's a matter of going through your own diligence.
Yeah.
of what the options are.
And to
And
what we were talking about earlier, exactly as you just said, whatever transition path you take, you're going to do diligence, right? But to what extent have you done the due diligence on yourself internally to understand what do you actually want to have happen here? And as we were talking about at the beginning of our episode, a lot of people either have not been taught how to do that diligence for themselves, or a lot of emotional factors get into the way that say, you know what, I don't want to go down that road. I'm just going to ride it out. And, you know, how many times have you seen business owners say, okay, I'm ready to sell now. It's time to sell. It's like, well, you should have been preparing 3, if not 5 years prior to coming to that point. You know, it's not as though I kind of go back to my dad's story.
mhm.
When I'm talking to people like this, one of those misconceptions that I often find, especially in smaller towns, it's, I shouldn't be planning for my inevitable transition until I've decided to sell. You're way too late, in my view. And I go back to my dad's story where, as I said, I was 14 years old when dad sat me down. Dad was 38.
Yeah.
How many 38-year-old business owners do you know that are contending with 200 years of family legacy in the family business, are proactively having that conversation, right? Like, there were no
Mhm.
transition advisors kicking around rural Prince Edward Island in the mid 90s when he sat me down.
Yeah.
Um,
But he was
but even if
thinking
you look,
ahead. He was thinking
he was
ahead.
thinking ahead. He
Hmm.
understood what he wanted the outcome to be. Um, but he didn't have to sell right away when he made that decision. He tried to make it work for another 10 years.
Hmm.
Uh, he was able to successfully wind it down in a way that we could keep the land, and mom and dad still live there, and
Hmm.
we have a path for the property to be in our family, and hitting year 300, right? Like, that's a pretty awesome outcome. But just again, the fact that dad was able to sit down and really wrestle with some deep emotional legacy driven factors, he was able to make a decision that he probably wished it could have played out better, but he was realistic in what he was confronted with. And so, my little brother and I were released from the farm, and dad kept going for another 10 years before he kind of wound down and found a second career chapter for himself.
Yeah. So I think, the podcast here is called the Cash Rich Exit Podcast. And the reality is that I do want to bring thoughtful, insightful guests to talk about intentional exits more
Yeah.
than necessarily the cash rich. Of course, you know, we've built something or you've bought something, you've grown it. Every business owner is really deserving their own cash rich exit, right? At the end of the day, it's really about the intentional exit. But I don't think
Yeah.
intentional exit sells as a as an interesting title for a podcast, right? So yeah, and you brought up in this last little bit here the entrepreneurship through acquisition, and we've had some guests, a recent guest that will be coming up somewhere in and around when yours is going to air here, talking about that idea as well. So many different options, and I think that's
Yeah.
the thing is when you've bought the business or when you've created the business, is from the get-go, not that you're going to have it all figured out, but as you're growing the business, to be thinking about how it is you would like to be exiting. And if it's the type of business where it's not really the exit in the sense of I can sell it to somebody or I can necessarily transition it. There are businesses that can be very fruitful for family under like a professional incorporation. That's not
Mm-hmm.
necessarily that's something that can be changed, but there's still a way to create the business owner's own exit that will be intentional and cash rich to support their family and goals. So it's all of the above, right?
Yeah. And that's a lot of when I'm talking to people, especially who are, as I like to call them, employee ownership curious,
Mm-hmm.
because exactly as you called out earlier, a lot of people just, haven't heard about the trust option or didn't actually know that a company as large and successful as Ellis Don was 100% owned by its employee base.
Mm-hmm.
As people learn about these opportunities, they hear about the research in the US or the UK, where, when you do it properly, great things happen for everybody. And so it tends to like really appeal, those concepts really appeal to people. But as you said earlier, there isn't yet sufficient awareness in the marketplace to really drive that education at scale. Very understandable, you know, because from a trust transition standpoint, that lack of clarity on whether the capital gains exemption was going to be around for a long time, stands to reason that a lot of people wouldn't invest a lot of time to build a practice or learn about the ins and outs of the model so that they can confidently pitch it to a client, right? Like that's a pretty understandable path for a lot of people to have taken. But now that we have cleared the runway and overcome that obstacle, a lot of the conversations that you're driving, how you're using your platform to get this information out into the hands of Canadian business owners, it's incredibly important and incredibly helpful. And we're at Employee Ownership Canada. We're very glad that you're part of our treehouse, helping the cause. But when I get into these conversations with, again, the really employee ownership curious people, a lot of it starts with some of those things that you were talking about a minute ago, where, if you don't know what you want your story to be,
Mm-hmm.
it's really hard to make good strategic choices for yourself, not only in how you grow the business over time, but then set yourself up to achieve that transition option that you think will work for you.
Mm-hmm.
It, I just try to anchor people's thinking on something very, very simple. The first one is like, when you are thinking about when you eventually move on, how much do you care about, on the one hand, how much money you're going to get? And the other axis is, how much do you care about your legacy? And so, on the money side, it can be from I don't care to I want all the money and that's it. On the legacy side, it can be I don't care to, like my dad, legacy is number one
Yeah.
and there is no number two. If people can like really stress test their thinking on where they really lie there, and the reason why I say stress test, it's not about conventional wisdom, because conventional wisdom would say, as a business owner, you should be up here somewhere, you sell for all the money, you don't care about the
Yeah.
legacy, and if that's not your game, then you're an idiot. It's like, well,
Yeah. That's
if you look at the Canadian Federation of Independent Business Research of its member base, it turns out that most Canadian business owners have a conflict in their brain between how much do I actually care about the money versus how much do I care about what happens to the community and the brand and the employees. And so
reputation and
all the things, right?
yeah.
Now, if you can really confidently for yourself stress test your thinking and say, I am in that top quadrant where I want to maximize value and I don't care that much about the legacy components, like you've earned the right to go down that path. It
Mm-hmm.
just means you're probably selling to a third party.
Mm-hmm.
Cool, give her, go for it.
Yeah. Yeah.
But if there's some balance of like, as long as I get like enough money or a fair price, and you know, the people that help me build this company get the benefits of future ownership, or I know that the business is going to say locally owned, operated, thriving in the community. Like these legacy things are important to enough people
Mm-hmm.
that you just need to be considering the fact that it could be a third party sale that works for you. It could be an employee ownership sale that works for you. It could be an ETA deal that works for you. It might be that you're hoping to have a successful intergenerational family transition. It could be a mix of those things, right? Like there's a lot of different things you can pull together. It just so happens that as business owners get more aware of the benefits, not only financially, but some of those legacy components of what an employee owned business model can provide, it does resonate with people. And then obviously it certainly resonates with people when they find out they can shield the first $10 million of the capital gains.
Yeah, exactly. So listen, Pete, we know you're involved with Employee Ownership Canada. Tell us about that role and your like business. Tell us what it is you really do and how to get in touch with you.
Yeah, so best place to find me is on LinkedIn, and that's the surest way to find me. Very active on there, and just again very thankful to see more and more people joining the conversation. At a macro level, in terms of what I'm doing as a solopreneur, I would say right now, there's really, as I said earlier, two halves to my brain. One is as a consultant, whether that's with the business owner directly or with organizations that have business owners as their stakeholders. So that could be a credit union, could be an economic development agency, a leadership incubator, chamber of commerce, you name it. As we've talked about in this conversation, there's a lot of work needed to normalize that conversation for business owners. So whether it's breaking the ice for the business owner themselves or the people who have that trusted relationship with the business owners in their community, I can be the icebreaker for people just to teach them how others taught me that internal due diligence you need to do in yourself to determine what is the story of you want to create. Again, I don't care what your story is. It's not for me to tell you what your story is going to be. What I do care about, and what is like a really great leading indicator to the outcome that I want to drive, it's just if you teach people how to think about this for themselves and define what they want, whether they go work with you or any other advisor, far better likelihood that they'll get the outcome that they want. The other half of my brain, as I continue to work in the employee ownership space, again, it's just the mission is how do you get tens of thousands of Canadians to be the majority shareholders of the companies at which they work? In some cases, that requires building more ecosystems in the financing side of things. In some cases, it's just how do you connect, how do you help a business owner build the pit crew they need around the table to get all the work done needed to exit into that employee ownership model. And so that's where I'm spending a lot of my time at a foundational level to just, again, lay the groundwork for more of these locally owned and operated exits in the future for business owners.
Alrighty. And I like to wrap up my conversations to ask for one piece of fun, frank advice. So I did warn you. Do you have?
You did warn me, and I've listened to enough of your episodes to know that the question was coming. And for me, as I mentioned, I've got a political background in my experience. I was an executive at a big five bank. Over that 20-year course of my career, it's always been about knowing your story and being able to confidently tell your story. Because if you don't tell it, somebody else will tell it for you, and you probably will not like what is told. So, to everything that you were saying earlier about that notion of ownership, if you really know what you want your story to be, there's lots of people out there who can help you achieve that outcome for yourself. Do not leave it to the devices of someone else to tell it for you, because they will.
Awesome. Thanks so much for being here, Pete. Appreciate it.
Thanks for having me. It's great to see you on screen again, and looking forward to catching up again in person.
Sounds good. Self-Made Nation, today's conversation, what stands out is that a cash-rich exit is not only about maximizing your cash-rich exit. It's not just about maximizing the dollar value. It's also about being intentional about what happens next for yourself, for the business, for your people and the community. Pete Walker, he reminds us that for many Canadian business owners, especially in rural communities, the real opportunity is to begin planning early. Begin planning early enough to create the options that will preserve local jobs and legacy, and consider employee ownership as one of those options. I invite you to connect with me, Colleen O'Connell-Campbell, through LinkedIn or through email, colleen.campbell@rbc.com. Thank you for listening. I'm looking forward to welcoming you back again soon. TTFN, ta-ta for now. All opinions expressed by me and any of my guests are solely their own and do not reflect the opinions of RBC Dominion Securities. This video is for information purposes only. Before acting on anything you hear or see, please consult a qualified professional. I'm a wealth advisor with RBC Dominion Securities, a member of the Canadian Investor Protection Fund.